Okay, I've got one of my trusted deal hunters here, Miss Maytal has. What's shaking, Maytal?
Nothing much. How's it going today?
Pretty good, very good. Better now that you sent me a deal. Uh, real quick, so Maytal's a real estate agent extraordinaire, and an investor. And neither of us are financial advisors. So take this napkin test as that. It's just a napkin test. You've got to do your own math. You've got to do your own due diligence. But this is just how she and I sniff out a deal, and she found what I think is a really good duplex in Denver in a nice area, and she sent it to me yesterday, and here we are. We're going to run the numbers. So real quick, Maytal, what do you think of this hood? Tell me about this hood.
Oh, I love it. So I actually have a friend that lives in here, and I've been watching them tear down everything in the surrounding area, and it's just situated really well. It's really close to Harvard Gulch Golf Course. I can't talk. And it's really close to DU, so I feel like rents would be really good. And so Rosedale is just underneath Platt Park, just north of Hamden, and then on the east side is University. So quick access to I-25, 285. It's a really, really good location.
Yeah, I agree. I mean, one of my buddies, Bernie, he's an architect and a builder, and he's responsible for a bunch of the cube houses, right? There's just new, I call them cubes. They're kind of blocky.
Yeah.
They're beautiful, and they're all over the place in this neighborhood, which is a good sign. Or so you're not on the bleeding edge if you're going to scrape and build something here. Like sophisticated, smart people have been there before us or before other builders right now. And so anyway, okay, so let's sniff this out. So I'm gonna. This takes 5-10 minutes to napkin test a deal. So let's do it. I'm gonna share my screen.
Cool.
So first thing I do when I see a deal is I go into trusty old rentometer or rentometer. And here it is. So this is 265 South Logan Street in Denver. Here, I'll highlight it for you all. And I look at the average rent, it's $1,700. The median rent is almost 16. The top 75th percentile is almost $2,000, and the bottom 25th percentile is around 1,400. So I'm going to use 1,700. And then I go and I timed it today. This took me 9 minutes. So this, again, 2685 South Logan in Denver, and we go through it. So I take rental meters number. It's a duplex, obviously. So we're going to be renting it for $3,400 a month. No laundry, no storage, no miscellaneous income. Maytal was kind enough to send me the taxes, $253 a month. Because it's a duplex, I'm going to put insurance at a little higher rate. I'm going to put it at $200 a month, and water and sewer at $100 a month. Obviously, the landlord's responsible for paying insurance, and often they pay water and sewer as well. But they don't pay garbage, electric, or gas. That's all the tenant. That's what that team means there. There's no HOA here. There's no lawn and snow here. I'm putting a 3% vacancy rate for Denver. Maytal, what are you thinking for vacancy rate?
Yeah, I mean, any of my rentals get rented out in 2 seconds. I've had 0% vacancy for about 5 years now. So, I mean, running our numbers, we always want to be conservative. So I think that's a great rate. I feel like most of the different updates I listen to, it's been around 2%. So I think 3 is right on.
Yeah, in the past, I used to do 5%, but that was just too much and it was unrealistic. And I'd agree with you, especially in the Denver proper. I mean, the vacancy rate is really, really low. So 3% is a comfortable number for me. I put 5% for repairs. Now, obviously, you're not doing $170 worth of repairs every month, but it's that big one that comes up when you turn, and it costs you $800 or something like that. So I think 5% is a fair number. This thing needs no improvements. So TK to me means turnkey. Property management. Now this is where maybe somebody who's managing their own deals could save $340 a month, and that's a significant chunk of change. But I use property management, so I always put it in there. I put it at 10%. And yes, you have property managers who say they're doing 8%, but then when you look at like the lease renewal fees or the new tenant fees, it's going to come up to about 10%. So 10% is kind of standard. I looked up the rates real quick today. I did a 30-year fix with 25% down, somebody with good credit at 3.5% for a duplex, investment duplex. So that's pretty good. So that's the P&I payment for a grand total of $29.83. And then we scroll up here and you see the total of monthly income of $3,400, the total of monthly expenses of $29.83. So you're cash flowing $417 a month. We're going to do a year-long calculation, so multiply it by 12, and your annual cash flow is just over $5,000. 25% down of the asking price is $144,000. I put closing costs at $5,000. What's that? Title, tax, insurance. If you're working with a lender that adds fees, then make that number bigger. We're a lender that doesn't add fees, so the only fees involved are the fees you can't avoid, which is title, tax, insurance, appraisal, stuff like that. So grand total investment of $149,000, and that puts your cash on cash return at 3.35. 3.35. Now I'll stop sharing. We'll go back to Maytal and I here. So if you would have said 3.35 to me 10 years ago, I'd been like, no way. I want close to 10%. Those days are over. Wouldn't you agree?
Yeah, definitely.
Yeah, they're long over. So now an investor needs to, in my humble opinion, and again, this isn't investment advice. This is just how I sniff out a deal, and we're asking Maytal how she sniffs it out. You got to do your own math, own numbers, own due diligence. We're not your advisor. We're just a deal hunter and a money hunter, or a debt hunter. That's what I am. But anything that's above 3% for me, I'm interested, because now it's going to be cash flowing, right?
Yeah.
And now I'm going to look at the appreciation play. I'm going to look at the tax incentives, right? What am I going to write off for my taxes? So if I do a sniff test, again, I have a stack of these things. I have I have just a stack of blank bigger pocket Foursquare methods. So I can sniff test a deal 10 minutes or less. And then if it smells like this, right? If it looks this good, then I go into my fancy spreadsheet where I look at the tax implications and the cash on cash and the appreciation and all that kind of thing. Right. So I'm going to toss it to you, Maytal. I mean, what's your magic cash on cash number to trigger you to go into your spreadsheet and look at a deal?
That's what I was just going to talk about. When I look at a deal, I want to be making $400 or $500 a month. That's kind of my bottom line. I'm really bad about doing CapEx and repair when I do my analysis, because I just know that I'm not going to have to be doing that every single month. So I'm probably more risky in that kind of situation when I'm doing these spreadsheets. But I feel like people just get inside their own heads. And if you start calculating all of the different things that you might have to pay or might not, you might never do a deal. So if I get 4 or 5 properties making $500 a month, I mean, that is good for me. And that's kind of what I did over the last few years. And now I'm looking to buy bigger and do something with all of that money. And it was a short 4 years. And with the appreciation we've had in the Denver market, it's accumulated to almost $700,000 of equity. So it might start off small and not sound like much, $400 or $500 a month, but in the long run, it's really going to make a big difference.
I'd agree. And I'm with you. I'd say anything above $400 a month. My buddy calls that the pile of cash, right? The pile of cash has to be big enough to warrant doing the deal. Yeah. If, let's say you're doing you find a really kind of lower end market and you're buying which I've done, right? And you're buying an $80,000 duplex. Yeah. And let's say you buy an $80,000 duplex and your cash on cash is like 20%, but it's such a small pile of cash that if there is a sewer, right? $5,000, $10,000, it doesn't ruin your year. It ruins your 3 to 5 years. Wow. So the pile of cash has to be big enough. So I totally agree with that one. And then, if you're to the point where you like appreciation, which you'd assume most people do, right? If you're investing for cash flow and appreciation, this would be, at least for me, this would warrant me moving to kind of level 2 and going through my spreadsheet, which takes 30 minutes or an hour, and then
Right.
making an offer here. So, and I like this area because
Yes.
Smart people have already scraped these and built fancier houses.
Right.
That's a really good sign, and I'm trying to do that. And I want my partners to tear into this neighborhood as well. We have zeroed in on a few other neighborhoods that Maytal is very familiar with, but I'd like to expand into this neighborhood.
It's a great
think,
area. It's so central.
I agree, and I think you sending me this deal is, after that, I'm sending this analysis to my building partners like right after we do this. So, sweet, Maytal, thank you. Anything else you'd like to add on this?
No, that sounds good to me.
Okay, I'm going to put Maytal's contact in this. Wherever I post this, I'll put Maytal's contact and, of course, my contact. And, yeah, and if you need anything, Maytal, like I said, Maytal's been a trusted deal hunter, and I've seen her hunt deals for not only me, but other investor clients for years now. So she's legit, and I can't say enough good stuff about her. So anyway, thanks for sending this, Maytal. We'll talk to you soon.
Yeah, of course. Until the next one.
Okay, bye-bye. Bye.